So it was a fundamental shift over the weekend for the G7, of course led by the US, but also with Europe, Japan, Canada, the UK, to sanction a G20 central bank. Unprecedented. The G7 brought down the heavy financial hammer against the 11th largest economy in the world, and every country in the world took notice. Nothing like this has ever happened before. It's not the same as sanctioning Iran's central bank, sanctioning Venezuela, sanctioning North Korea. It's different fundamentally. It's different financially. Close to $400 billion were frozen. It's like the equivalent of Austria's GDP being taken out of your bank account overnight. So yes, you're right. Every country took notice of that. But it's only going to accelerate a trend that already existed for China and others to look for the alternative to the dollar-based financial system. And as much as they would like to find it, I actually think what we saw over the weekend and what we'll see implemented in the weeks to come show the power of the dollar-based financial system. Because I don't think even Russia and Putin believe that they could be so united in international finance. I didn't think they could this weekend that quickly and take that money off the table. That's why these FX reserves were actually located all over the world. So it's a significant shift, but I think it actually shows the strength of the dollar in the near term, not the weakness.
Right.
Doesn't mean countries won't still look for alternatives.
No, but that's the very power of the US control of the financial system is what I'm talking about, and the impact psychologically that it's going to have on every other central bank around the world, and also the impact of the liquidity system, the liquidity in global finance, if even the smaller countries begin to say we need to rethink how we manage our money.
They will rethink that, but the question is, what are the alternatives? So are you going to park that money in China? So the question is, right now, there aren't necessarily alternatives to the dollar-based system, and that's what Russia has experienced in a very painful way in the weeks to come. You know, they used to talk about Fortress Russia even a few months ago. The gold reserves and the hard cash would protect them, to make them sanctions-proof. I think we're seeing that's not the case.
Can I just expand on Taimur's point and ask you about the cost, Josh, of these sanctions and Russia's exclusion from the SWIFT system? To what degree is it going to strain dollar liquidity to the point where central banks may have to consider reimposing liquidity swap lines and expanding the balance sheet again?
So it is something central banks are already considering. And the SWIFT issue, I think, pales in comparison to the central bank issue. It's gotten a lot of attention, as we all know, messenger system, not money. But it is a wake-up call to banks, and it is a wake-up call to countries. And this is why there are alternatives being developed in wholesale central bank digital currency to really develop systems around the SWIFT system, but those are years from coming online. And in the interim, what you're saying is correct. Thinking about liquidity, thinking about swap lines, and thinking about their own balance sheets in a very different way. And that's going to be a fracturing of the global financial system. I see the G-20, which kind of rose to prominence after 2008, the global financial crisis. That organization is unfortunately defunct now, with Russia being isolated from the global financial system and China trying to play both ways. So there is no global economic coordinating mechanism, and that means countries will try to retreat and protect their own finance as much as possible.